Welcome, welcome to another video by the Market Maker SA. It's been a while, guys. Hope you are doing good. It's been a while since we've taken out a video. This is our first video of the whole year, so yeah, let us begin. Today we'll be looking at gold. And how basically me and the Market Maker SA basically interact and take it and how we take it head on a daily basis. So without further ado, let us begin. Before we begin, don't forget to like, comment, subscribe, turn on that notification bell icon to get notified anytime we drop a new video. So without further ado, let us begin. Now when I always excuse me for that, when we always interact with gold, I always tell my group when we interact with gold that gold, we don't really look at gold in terms of the BTMM. I tell them every time that looking at gold from a BTMM point of view, it helps, but it also doesn't help that much. I mean, if you actually think about it, those peak formation highs and peak formation lows are good for directional biases on gold, but gold is usually a pair that we usually talk about execution and how your execution is, and that's something that I've seen valuable with gold. So basically we use smart money concepts and supply and demand to basically take it head on. So without further ado, let us go into it. So what we usually do, we usually start it on the high time frames. We usually start on the high time frame with gold, and right now I'm on the daily chart, and I can already see some form of peak formation high that has been initiated there on top, things that I like very, very much. And in the next thing that comes to my next attention is this change of character right here, confirming this break of structure, giving us this lower low after that lower high. Things that are like very, very, very nice, very, very nice. And obviously after I've identified my break of structure, I start looking for my bank moves. Now the most prominent bank move that I'm seeing here is this one right here on top, this rally base, this drop base drop, excuse me for a mistake, but yeah, the drop base drop right there. And as you can see, market then slightly came back to it, touching it a bit and ran away. So that was very key there. Key decision point area there for the market, as that is the swing point where market changed the directional bias of the market. So after Vele, we've identified the bank move, and we've identified or in this case is our supply zone. We start looking at how much time did market spend on that area. And as you can see, if you look there from your consolidation area, market spent 1 2 3 candles, or 3 daily candles on that area, meaning the base area is very, very good. It's still fresh. One thing that you always have to look at is you have to look at the consolidation period. The best consolidation period that you can consider is from 1 candle to 3 candles. 3 candles going up, usually null and void. So once we've identified that, we start looking for our external and external liquidities. And as you can already see, we already have an external liquidity that right here, an area where market can then target after feeling that bank move. And you can see we have another external liquidity there on top in case market does not respect that bank move, and it's an area that market will take out. Then we start to reassess on how we can then further attack the market. So after I identified this, because I remember very well, if we can't, obviously right now this all happened, but when we went into it last year, we saw it in these areas. So we initially knew it's okay, that we are hoping that market comes to this external liquidity, takes out this area, takes out the people that were in there buying, and take out all the people who put their monies there. And look, see what market has done. Market has started its retracement phase already when it entered into this fair value gap. Now what's very, very prominent or what's very the contradiction with this fair value gap is that market had already entered into the fair value gap. That's very interesting. It means the fair value gap is no longer fresh. It means it's no longer null and void. It means the bank moves that were in there have been triggered, so it's officially null and void. So instantly there, me and the team already identified with the, okay, that is an area of trap. Market is trying to trap participants to go into it long, which in fact market is actually dropping. And as you can see, there's a lot of news out there that is being told that gold is targeting some highs, very key highs in the next couple of months. And I feel like that's just all noise, because if you look at the pattern, if you look at your BTMM pattern, our level count has already been completed. The peak formation low has already been structured, and break of the previous structures of the previous long trend have already been taken out. So that's one thing that's very important. So I knew instantly, okay, that could be noise, but in this case, let's just jump onto that bandwagon. So me and the team officially then came to a conclusion that, okay, we're going to trade this retracement area, because at the end of the day, gold has a lot of money, and it's something that we can target, we can execute and attack if we use our smart money concepts and the lower time frames, which is our our ITCs and those type of things. So yeah, so if we scale it down, scale it down, me and T, if you can scale it down, we saw this. Obviously there's even more micro break of structures, things that are very important, creating turtle formations, or head and shoulders if you may. But anyways, that break of structure officially confirmed with T, that is our lower low, so we're expecting a lower high, and we usually wait for our lower high to come back to a swing point, usually on a bank move, and which in this case, the only bank move that had a proper momentum away from it was this base drop. Very nice stuff. As you can see, this one, number one, it's in your discount zone. So that means trying to sell anything at this price is too cheap. It's too cheap for us to even consider selling it. So we're looking for it to come into the premium zone, then we can start looking for ways to sell it at a decent price. And how you can identify your premium and discount zones is very simple. As you can see, your 50 there, let me just do it there. There we go. Your 50 there indicates 50. From your 50 going up indicates your premium, 50 going down indicates your discount. So that's very key to know where. And obviously when you want to sell, you sell at your premium. When you want to buy, you buy at your discount. So that's very important. So me and the team officially knew it's okay, this type of area is our targets. For the next week, we're gonna continue attacking gold until it reaches to this point of in this point of time in the market. So we instantly knew, okay, this is how we're gonna attack it. So obviously now we have to scale it down even further. As you can see on the H4, we already have break of structure right there. Our break of structure was very important, as market had to come into that area of imbalance and fill it. Market had to come in that area and fill it, because there are people there. Number one, obviously it was a way for them to take stops, because there are people there who thinking that's a fair value gap. People who entered on that trade with a mindset of a fair value gap and a breakup block on that other side. They went in that mindset thinking it's going down. Like the market came back, took them out, made them sell side liquidity. Or because number one, they traded at a cheap price, they sold it at a cheap price, and number two, the fair value gap is actually null and void if you actually think about it, because of the fact that it's in a discount zone, and also the candle's way too long. News candles, it's way too long. So that's something that we've then identified a break of structure, as we had that break of structure indicates our high. Then we came and then once it identified our high, we instantly knew, okay, wow, trying to anticipate a high low. And as you can see, we usually wait for our high lows where in our points of interest, usually being our bank moves. So if you go down to the H2, me and my team, we love using the H2 because we feel like it's a way to eliminate the noise, but at the same time it's a great way to execute trades. If you go down to the H2, as you can see, what happened here was very interesting, and actually it was quite a high trade to get if you actually think about it. Let me just fix it up there. There we go. It was a tough trade to get. Cause if you actually think about it, market gave us this peak formation low, first leg, second leg, beautiful stuff, giving us a drop base rally, coming back and running away. Very, very nice stuff there. I like it. As you can see, it was a down candle. It was a down candle order block. It was a down candle order block, as the last candle after the momentum away was a candle that took out the previous candle, making it a down candle or an up candle order block. You know, these things are usually found in ITC and him explaining these type of special order blocks that he came up with, but they're very, very useful. But anyway, it's not about that. So instantly we knew, okay, that's an area that we can definitely target. Market will basically wait if we use that down candle as a mitigation block. Obviously, mitigation block is a point of, it's a type of order block. It's a type of block that shows you possible points of interest. So it shows you where it basically it highlights an area where you can find possible points of interest. That's a mitigation block, if I may sum it up to my, yeah. So anyway, after that mitigation block, we instantly knew that market had to come into that area and run away. And as you can see, what happened is market came into it, acting it as a big fair value gap. Now, this fair value gap was very, very important. It was very important because, as you can see, it was very, very important. As you can see, it was merged with a what? With an inverted fair value gap. That's very important. Very, very important. Very, very key. Now, obviously, inverted fair value gaps combined with a normal fair value gap are extremely strong. But we knew what we wanted to do. And we knew, you know, because of the BTMM rule of saying on your peak formation lows, never trade level one leg, you wait for your second leg. So we knew that's a trap. We knew even if we tried to trade that, we would have made a little bit of money, but it would have been money that would have been satisfactory for amateur traders, because they would have been happy. Then they start relaxing, and then market came back taking out their stops, and now all of a sudden they're back to the drawing board. So we knew what we had to do. Waited for this second leg. And then yeah, we went into there, we did our thing, and we were out. And obviously, as you can see, waiting for the second leg was very, very crucial, because after that, just waiting for my 3, 4, 5 candles, and then you trade, and then you're out, because we knew instantly. Remember, it's very key that we knew that market had to cover this point no matter what. That's why it made this trade super concrete. We knew market had to cover that imbalance area no matter what. Market always has to cover the imbalance fields of the market. They always have to cover up for their messes. And in this messes regarding to news. So that's very, very important. So what then happened is we traded and we put our stop losses right there. That was our first hit, first target. Very, very nice stuff, because we knew market had to come in there, cover that area and run, and then we can start to reevaluate what we're going to do with the market. So we made our monies. Very, very nice stuff. Now what market did is it left a big trail behind. This is very, very important. This trail behind, of course, is then constituted as our what? As our imbalance. And we all know market has to come and cover imbalance. Now, I know what you're saying. What is the difference between an imbalance field and a fair value gap? Very, very simple. For you to make a fair value gap null and void and reconsider it to be a imbalance field, you first have to look if there is no down candle that has been initiated before the momentum, and which in this case, as you can see, there was a down candle right there that was initiated for the rapid momentum, and that down candle officially makes that what? Our down candle order block. So instantly we knew, okay, that is a null and void order block. That's a null and void fair value gap. It's an imbalance field. And you can see what market did there. Market came back. People traded the fair value gap. You know, the amateur ITC traders, the amateur people who are trying to get into his stuff, thinking it's a get rich quick scheme. But in all fairness, it's not that. And as you can see what market did there, very beautiful, ran away, gave them 2, 4, 6 hours of happiness, 6 hours of joy. I mean, if you traded with the 0.10, you could have been up about probably $30 to $45. It's decent money, but people are, the human nature of people is that they're greedy. So people will be expecting and wanting to get more and more and more. And as you can see, what market did there is very, very nice stuff. Market then came back down, took them out, making them what? Sell side liquidity. Very, very nice stuff. They took them out, making them sell side liquidity. And you can see, in regards to what we're trying to do here, well, we first identify the break of structure and the sell side liquidity. Then we identify the accumulation, manipulation, and after that, we're waiting for distribution, guys. Very, very important. You guys need to understand how important those things are. They're very, very crucial, and they can help you a lot in your trading. They can make your trading super, super simple. So anyways, what market did gave us the accumulation, manipulation, and then it came into the order block. Now, very key, came into the order block. Gave us this first leg, came back, giving us a second leg, then it ran away. Now, here's the key part here, guys. The key part here is that usually in BTMM, after it comes into an area like this, in BTMM we call it a reset, because it's resetting the levels. Because this could have been level 1, then market came back, violated it, creating a level violation. If you don't know what's a level violation, you can go back to one of our videos in our channel, and it's a video that basically explains what a level violation is. So very crucial. They're very, very important. So anyways, very important there. So that becomes our reset on the BTMM, but here it becomes our order block, rally, base rally, retracement back, first leg, second leg, beautiful trade, and we were in there. We were in that trade. Very, very nice stuff. Now, obviously, we targeted our take profit to be usually right here on top as a break of structure, because we knew this is a bit of a scam move. It's not really concrete, it's kind of too tight, but we traded it anyways. And as you can see, what market did, ran away very, very, very nicely. Could have netted us about with 0.10 about $80 to $100. Don't mind that. Now, what's very, very important there is, once again, this fair value gap right here was beautifully covered, but as you can see, market beautifully covered, but for only 2 hours. But it was a very nice fair value gap there. Very, very nice stuff. So then what market did, and the market came back, took back all its money. Now obviously us were out, because we have a mechanical strategy and we have our risk management. Our out of 2 hours, 1:3. So we were already done. But there were some people who could have seen that. Amateur BTMM traders could have seen that. Amateur SMC traders could have seen that. Traded it and holding for the next 5 weeks. And as you can see, what market did, market then came back, took them out. Obviously them out was us if we held longer in that trade, but obviously we were out. But it took them out, took their monies, and it did it super, super slow. Took their monies out. All of this is just a big retracement move. Coming back to let's go back to our H4. See which point of interest was market trying to attack specifically. As you can see, it was this big up candle, down candle order block right there. That was beautiful stuff if you think about it, because market had to come back, fill that order block, and market ran away. So that was very nice stuff. Market came back, filled that order block with this whole retrace move, taking out a whole bunch of people, making all the people that were in there holding those temporary trades sell side liquidity. So that's very, very key, very, very important there. Market came back and it just did the business that took all of them out. So then what market did, they were officially new. Okay, so we're officially new. Okay, now we had to reevaluate. Market came into that area. It doesn't mean it's going to take out that low, because the peak formation low has already been set. So basically what we're looking for now is that obviously we first saw this break of structure. Well, this was after what we did. So basically what we did is, if I can go down to my H1, okay, let's go to the M15. See how it is from the M15. As you can see, let me just zoom out right there. Okay, so as you can see, after that huge gigantic move happened, which actually caused a lot of stir, because a lot of people were holding gold to buy. Let's just switch back to the H1. There's a lot of noise on the M15. Noise I don't like. Okay, this is splendid. So what happened here, of course, this became our new reset pattern. Market giving us this very nice half a Batman right there, half a Batman. Very nice stuff. And obviously when market did a half a Batman, we always have to remember market made a rally based rally, taking out all those areas down there. So we taking out all those structures up there on top. So officially we had officially identified that, okay, market has taken out those structures and made this a higher high, so we're expecting an official higher low. Question is, where were we expecting the high low to be? Me and the team instantly identified that the down candle order block right here is the best point of interest and not the fair value gap, because the fair value gap is null and void because of the down candle order block. And you can see market went in there. We took that trade very nicely. We didn't hold it for long because we were a bit skeptical. Kind of took our take profit right there because it was quite a scary move that the market did there. Take profit right there, 0-10. You're making up right about $100, $150. Very nice stuff. You can't complain about that. As you can see, market went for long, went for probably 3 days, 2 days. Very nice stuff. And market had to 2 days, 3 days. Very nice stuff. I mean, we could have held for longer, but we didn't. Market held for that long period of time, taking out all those structures as well. Very nice stuff. And then what market did is very nicely, market then came back, retraced back, took out back all the money. Because guys, you always have to know, market has to eventually come back and try to recover the amount of money that they lost. As you can see, these type of fair value gaps were in balance fields, because number one, that's not a very good fair value gap, as it's not a very good fair value gap, as it was too cheap to buy. No, not too cheap. It was too expensive to buy because it was in your premium zone. And trying to buy in your premium zone is a death trap. However, if you are very smart and you're trading the retracement, you could have taken that as an inverted flippy fair value gap. Market came back in that area. Could have taken that as a sell in and out 2 hours. But I feel like the only way you're going to take that trade is if you had insider information. So I don't think that was smart. But what market did is, market then came back to this area right here. Came back to this area, halted at this area. Which is a very I mean, we have to see what's the relevance of this area, because I don't see it on the H4. I feel like the only way we can see it is where? On the daily. But market came back to that area, you know, because market had to rest at some point. And as you can see on your H4, okay, there is relevance on your H4. There was an order block right there, down candle order block, beautiful stuff, making all those fair value gaps null and void. So that was market's rest point. That was market reset. Market's reset point, because market had to reset the pattern in some way. But market has to continue to do its thing. As you can see, what market did here, very nice stuff, is market then broke this structure, but made this structure a sort of turtleneck flippy / head and shoulders pattern. That's when you instantly knew, okay, something might be afoot here, because every time market breaks for a lower low, you always expect a lower high. And if the market context is not in line with the bias, that means it's a trap. Because a lot of people probably saw that and traded it as a breakout. It's a breakout, and then they got taken out. So that's when I instantly knew, okay, there are people there who are selling. So what we're doing, market went into an area like that, we are buying. So what happened is, then obviously our bias was correct, but we didn't trade it, as we kind of retraded because we saw how choppy it was leaving, and we're like, nah, it's not worth it. But market did a lot of important things here, because market then gave us this very nice based rally, came back to this base area, filled it. As you can see, took large period of time for market to do anything there, because market took 2, 4, 6, 8, 10, 12, 14 hours before market can do anything. So that was very random. It was very random, but market did it. And so as we continue going on, Market eventually left, breaking structures everywhere. Broke structures there, higher highs, higher lows, higher highs, higher lows. Then market came to this area, yeah. And this area was very, very important. As you can see, as I was telling you, us as the market maker SA, we identify that supply zone that we marked down on the daily, that is gonna be our area where we will stop buying and we'll look for possible sells. Now this was very crucial because it happened on the NFP January that we just came from. Very, very crucial because what happened is we were as the team we were stalking this trade almost the whole trade day because we didn't want to trade before. We were putting our baskets on on the NFP. So what happened is that the NFP happened because we were on the M5 because we wanted it to be an in and out thing. So what happened is right here, beautiful stuff that happened here. Because let me just pick the supply zone right up. So what happened is that we saw that peak formation though, peak formation high, and we're like, that's an M formation. That is some beautiful stuff there. M formation with some liquidity being taken a bit there on top, and the market dropped. So instantly when market dropped, we identified this base drop, this down candle order block right here. We identified it as a point of interest for the market to come back to in this NFP. And then what happened is a great story because in the group we're kind of divided because there were three of us were basically saying we're gonna sell it, and one of us was saying they're gonna buy it. So, and obviously I was one of the people who says we're gonna sell it. So, you know, majority listened to me. So what happened is that we sold it. We sold it before NFP. We sold it right there, and we were holding. The moment NFP happened, NFP dropped. NFP dropped 0.10, bagged $150. We were out instantly. And then what happened is the same guy who said we must buy bought, and he was in drawdown, but then he continued holding, and then at the end of the day he ended up possibly making more money than we did. So that was a random story, and the market ended up not respecting our area, but we made our money and we left in and out because we made enough. We made the type of money that we were expecting to make, and we're out. We didn't need to hold for more. Our targets were met. And then obviously what happened, the market then didn't respect that area. You know, I wasn't really that happy for market not respecting that area, but market didn't respect that area that we marked out. So we had to reevaluate. And you can see market right now is already going for those for that external high right there. I see market taking out that external high, then dropping, possibly coming back into that area into that supply zone on the daily and doing something else. But as for gold, I'm seeing it continuing rising. As you can see, it's already entered into that huge down candle order block right there. You know, now that I realize it's actually a very very smart trade. Market giving us that first leg, second leg. Let me just go back there. Market giving us that first leg, second leg, and market is already rising away. Very, very nice stuff. Market is already creating order blocks already. So those could be potential areas where we could continue. We could join along on this trend that market is trying to push. And as you can see right there, market has already left some trails behind of their little, what's the word am I looking for? Exploits. Yes, of their exploits right there on top. And as you can see, market is already running away. So what we basically expecting market to do is coming back into that area, fill it, then we rise up, and we could be looking for trades. Now currently me and the team were holding a trade right now in the GBP USD. We saw it very nicely in the morning, and we saw it instantly, and we're like, that's a buy. So right now we're holding it as a buy, especially with what happened with there was a CPI in Britain, so that's very important. So as you can see, the trade is currently holding out a bit. You know, I mean, we traded right there. I mean, how we caught it is we caught it right there because obviously that we saw the down candle order block right there. Let me just remove that. Yeah, we saw the down candle order block right there, and I'm like, okay, this could be a great trade to hold. So obviously what happened that CPR was kind of doing some weird things, but it ended up going into the direction that we're expecting. As you can see, market is already showing promising signs of going for our targets. As you can see, we traded right there and we're still holding. You know, there was a very good opportunity there for fair value gap. Fair value gap wasn't respected because of the down B massive down candle order block, but that could be an area where market could come back, look for support, and continue the trend. So very key there, very important. As you see, market came back into quite a promising area. Order block, not really the freshest, as market came back, filled it, but that doesn't mean it's not in void. Very nice stuff. Hoping market comes in that area and then rises up. But yeah, thank you guys for watching. Those who watched, thank you guys for watching our gold breakdown on how me and the group and the team trade gold. Don't forget to like, comment, subscribe. Guys, stay tuned. We're gonna be posting a lot of videos like this year. You know, simple market breakdowns and things like that. But yeah, thank you guys for watching. Peace.